Today on Gile Group, we are talking about the changing market and the opportunity for you to lock a rate and shop for a home. Hey everybody, welcome to Real Talk with the Gile Group. Today, Tom and I are going to talk a little bit about the changing market and what's happening with interest rates, as well as opportunities for you as a buyer to potentially lock your rate before you decide to find, or before you actually find a home. So you can lock and shop. So let's talk a little bit about do you want to start at locking?
Yeah.
Okay.
Well, no, actually,
there.
let's start at the market because I think
Okay.
we need to back it up and talk about the market first.
All right.
So obviously, the Fed came out and did a 0.75 of a point announcement that they're raising the federal funds rate. That was causing there was a lot of speculation before the Fed's announcement that was really driving mortgage rates up pretty substantially in the second week of June. So
I was just going to say, seems to me it was about the second week of June.
Yep.
We had some listings come on right around
We
that
did.
time that kind of went for a minute.
It was causing some pause in the market, some I think it's a little bit of anxiety for people just trying to understand what was going to go on with rates. I know I had some buyers shopping at the time, and they were quoted rates about 6.25.
Yeah. Just to talk about the rates for a second, because I think, first of all, when we were seeing the 2.75 rates, we were all saying, that's insane, crazy low. We've never seen that before, historical lows, which was all true. And people got to take advantage of that, and that was great. But in all honesty, to me, it's that picture of the pendulum swinging from one place to the other. And currently, we're kind of coming, even though it doesn't feel like it to some buyers, we're kind of coming back to center. We had 2.75, way crazy low, and now coming back to 5.6-ish. Honestly, those were all rates we were all very happy to see, because back in the 80s and the high ends of our markets were in the 13s.
Right.
So that 5 to 6, in my estimation, and in my life experience and my as a realtor life experience, that 5-6 is really that kind of middle ground. Mm-hmm. The question is, what are the Feds going to do, and how will it affect rates? Are they going to kind of come back and stay in that middle range, or are they going to continue to go up and then hopefully eventually 6-8 months come back center?
Yeah, good questions. And like you said, the Fed actually took action, and those rates, they purposely bought down mortgage-backed securities during the pandemic to try to spur on the economy. Right. In addition to doing stimulus checks to everyone, they did it with the mortgage rates. And they did it with mortgages to really try to keep that moving. And it was very effective. It did what it was supposed to do.
Exactly.
But yes, projections that I'm seeing are kind of what you're talking about. The new normal is like the 5.5%.
Right.
And what I'm seeing, what I'm reading is, we may see some spike.
I don't like the words new normal, but we'll talk about that in a second.
But the rates, we're projected to be mid-5s towards the end of the year. We're in this period of volatility right now, based on what's going on with the interest. And inflation.
Right. And yes, it's affecting buyers. I mean, I'm just trying to put somewhat of a positive, not really a positive spin on it, but just some reality around headlines, because we talk about those headlines are fear-provoking always. So delving into the information, which we try really hard to provide to you guys so that everyone is understanding what's the reality is, and not just a headline, that it is not necessarily a horrible thing. We know how hard it was for buyers when we're talking multiple offers, and we're still seeing that in some properties. By no means is the market crashing. We're just seeing things calm a little bit and people take a breath, I think.
Yeah. And I think some of it can be a matter of perspective. Yes, the increased rates have definitely added to a person's monthly payment.
Right.
On the flip side of it is, when you had to go $100,000 over asking price, that added to your monthly payment also. So I mean, I think we're seeing
it's perspective.
It's
Part
perspective.
Of it's perspective.
We're going to see what we'll start seeing is not these offers going over asking anymore.
Well, certainly not crazy over asking.
Crazy
if
over
you're competing,
asking,
you still are going to technically probably go over asking.
Yeah.
But to kind of switch gears away from the interest rates a little bit and do talk about what's happening with supply, because our demand was greater than our supply. I still believe people are taking that breath. They're taking that emotional break. They're stepping back for just a second and looking to see what's happening. They're kind of observing what's happening. But there are still people out there buying and selling both. That they're going to be able to move and purchase without the pressure of all of the constant, like, it just always felt like hurry and competing. And we as agents, while it's certainly busy and we're helping a lot of people, it also is not really the realm I like to work in. And I think we've discussed this before, where it's like, I prefer a balanced market. So with our supply increasing a little, we'll probably be a little over a month and a half, maybe, guesstimating on what was going to happen for June when we see the numbers for June come mid-July is when those numbers come out. We'll probably see it start to tick up a little bit. So, that will be interesting to see what happens too with that supply and demand and the prices leveling, not
diving,
leveling out, and not having that frenzy of having to compete.
Yeah. Another thing, a headline came out this week, had to do with Fannie Mae had revised their sales forecast for the year. And of course the headline was made to sound shocking. Then in January, their sales forecast is that we were going to be just 2% off of 2021 numbers in terms of sales volume. Now, the headline that came out 6 months into the year is that we're going to be off about 11%. But think about it. I mean, we already, in the Portland market anyway, we're down 11% sales volume-wise as it is. That number, I think, sounds scarier than the reality of the situation.
Yeah.
Because if you look at 2021, it was a ridiculously high volume of product that sold, of houses that sold in 2021. And it doesn't make sense.
Well, we couldn't keep it, that's for sure.
Well, yeah, it doesn't make sense that we'd even stay on that pace.
Right.
And, when the first projection came out at 2%, interest rates were still in the low to mid threes. So I mean, that was part of what was driving that projection.
Yeah.
So.
Yeah. So changing market, and we all have to learn to adjust and pay attention to the data, to the facts, and for us to help our sellers and buyers understand what's happening in the market. And that's really our job. Ultimately, buyers get qualified. Buyers make the decision if they want to buy. Sellers make the decision if they want to sell. And with our counsel. To that end, there's some interesting pivoting news in the mortgage. The word escaped me. In the mortgage world.
I'd like to hit one thing, and then we'll jump into that. But I'd like to hit. I know you want to get into it.
Talk this much.
but there's one thing I want to do, because this comes back to headlines and it comes back to people's perception versus the reality of the situation. And the headlines were really out, a week or two ago. Mortgage rates are above 6. Mortgage rates, that's all you heard, above 6. Guess what? In the last week, they've come down half a point. I don't remember hearing that headline go out anywhere about anyone saying that they came back down, but they're back in the mid-5s.
Much more salacious to say it's over 6.
It is. But nobody says it came back to 5.5. And obviously, yes, when things change like this, it causes some pause in the marketplace. Yeah. But I think buyers need to understand is that, those mortgages, they fluctuate daily and weekly, and just because it was 6 a week or two ago doesn't mean that's where it's at now. So it's super important to be in constant contact with your mortgage person or
lender.
Yes, your lender.
So important. And we have, even working with buyers, send buyers back to the lender. We always make sure that they understand their numbers. Buyers understand their numbers. Sellers understand their numbers. That's the way they make a decision. So always really important to check with that lender. Yes. So now let's get to some good news and some pivots.
Well, this is good news. I did too. But yes, you got some great news.
You're right. It is
exciting.
Good news.
Some new products that we just found out
options.
about.
It's options. Options. That's all it is.
Yep.
So let's talk about they're calling it lock and shop. So typically, you could never lock your interest rate until you are actually under contract on a property. That contract goes to the lender. You, as the buyer, work with your lender to decide and watch and decide when you're going to lock your rate and for how long. Right? So now because of the fact of the volatility and trying to spur some, I don't know if confidence is the right word with a buyer.
I think stability.
And confidence. And options, just options like we have with sellers and trying to bridge loans and things like that. That's an option. This is another potential loan option. So you can talk a little bit about the...
Yeah, there are, and again, like Vicki said, you want to talk to your lender about it, but lenders have different programs available out there that are going to allow you to lock your interest rate now before you write an offer on a house. You could lock it anywhere from 30, 60, 90 days. Actually, I've seen some programs out there up to 180 days. The longer you're going to do this lock, there's obviously going to be there's going to be some cost associated.
Absolutely, of course.
But think about it.
So you have to weigh the cost, right?
You got to weigh the cost.
Locking in, because as your interest rate goes up, same thing. When you buy a rate down, same thing.
Exactly.
It costs money. So you just, again, looking at those numbers when you're the buyer and figuring out and working with your lender to figure out what makes the most sense.
Right, because these lock and shops may cost you anywhere from like a half a point on your loan, but basically 0.5% of your loan value to 1% of your loan value. So it may cost you somewhere $1,500, couple $2,000-$3,000, but those are things you just need to weigh, because obviously if you can save money, a couple $100 a month in your mortgage payment by locking at a good rate, that'll far exceed that upfront cost of $3,000 or something now. Yep. So those are all things you just need to consider.
Yeah, it's looking at and working with your lender and your realtor. We're all on that same team. So that's what we want. So talking about options. And so we did a podcast a while back with Shane Musselwhite with Oregon Home Mortgage. And I think maybe we might do that again.
Yeah, we need to get Shane back and talk about it.
Yeah, Tom and Shane love to talk the numbers, and I'm give me the high points. So maybe we'll do a combination of Shane and you talking really about numbers, and then really going through a real life example.
Yeah.
I think because that's where I come from, that creative side, and you're definitely that numbers, detail, graph person.
Yep.
So I think being able to appeal to everybody in that is your yin to my yang will benefit you. So thanks for joining us. Don't forget to follow us and subscribe to this channel.